Hey guys, welcome back to the channel where your host actually trades and manages client money for a living. Today we've had a nice uptrending day on the SPX. We're now back above 4,000 to finish at 4,045, really strong. You can see we've gapped up here and just kind of gone parabolic on a nice uptrend day. Same with NASDAQ as well. Stay with me through to the end. I'll let you know how I'm positioned going forward. Came into the day market neutral. As you remember me say yesterday, this could be a potential short-term bottom as we've completed the pullback to the trend line, and it looks like we've followed through on that today with a really nice green candle here. So let's just go over and look at breadth today. So for a change, we've actually had some blanketed breadth. Pretty consistently green across the board except for consumer defensive, but all the growth cyclical names rally today. Same with defensive sectors, utilities and healthcare. Energy and REITs did as well too, and just really green across the board, which we haven't seen for a while. So that was pretty bullish day out there today. Moving forward, we've had Wall Street top strategist Mike Wilson warns that stock exchange could drop 20%. So there's still a lot of bearish commentary out there, and he's saying we don't have a crystal ball, obviously, but what we can confidently say is that the equity risk premium and the multiples do not reflect the earnings risk that we see. 3 months ago, most institutional clients thought a recession was very likely. Now they're thinking it's not so likely anymore, so that's a big sea change. Global money supply growth has been more than offsetting what the Fed has been trying to do with tightening financial conditions, and has created an ebullient environment for asset prices. That's not sustainable in our view. We don't think the bear market is finished because the earnings recession is far from finished. So I can agree with some of those points, and that's overall where I stand. I still think we're a bear market rally because earnings are very cyclical, and when they've gone to decade highs. And they have shown signs that the last earnings seasons we're still going through only had something like 65% beat against an average of 77. So that there is some truth there, and valuations aren't great on equities as well. And Fed global central bank liquidity has dried up a little bit, which I'll get to in a bit. But moving forward, US home prices could plunge 20% amid risk of deep housing slide, Fed economist warns. And he's going on to say global housing markets become increasingly frothy since 2020 as a result of pandemic boom. Also goes on to say the US and German housing markets that threaten to pose a vulnerability to the global outlook because of the size of those nations' economies and significant cross-border financial spillovers. And saying that could be a bit of a domino effect. And I agree with this argument as well. I mean, housing market, this global pandemic and then housing market booms, it just doesn't sound right. Having pandemics and then asset prices being inflated, it's because of the central bank, and now they've turned the tap off. And I think things will come back down to normal, as we're seeing in US housing affordability has actually reached its worst level ever, worse than the GFC. And repayments going up and valuations coming off peaks as well. Data out today had some PMIs a little bit better than expected, and ISM non-manufacturing employment and PMI a bit better than expected as well. So the economy is still going along here. It's not slowing down. With housing slowing down, but the rest of the economy is kind of holding up. So I think the stock market's getting excited with the lesser chance of a recession and maybe being able to handle those higher rates for now. Fear and greed ticked back up just a little bit, still neutral here. And options market today. Meme stock call option buyers were well and alive today. If you're looking through here, the most popular stocks, Tesla as normal, 3.2 million contracts, which is huge, 55% calls. Apple, 54% calls. Meta, 58% calls. Nvidia, about split. Amazon, 59% calls. AMC, 62% calls. AMD, 62% calls. Google, 69% calls. AI, 68% calls. Barber 75, Rivian 67, Neo 72, Lumina Tech 85, Bed Bath Beyond 62%. So A lot of retail buying call options out there today, jumping on board, and that's created low put call ratios, which I'll get to in a bit. Maximum pay-in on SPY options. This is looking at regular month, the third Friday of the month. We've got max pay-in lower at 400, currently at 404. So dealers will make the most amount of money if we pin back down to 400. And looking at next Friday's expiry, that's 400 as well. And coming into next week, a little bit lower, 397 and 396. So looking at next Friday, got that big wall there at 395, 49,000 open contracts. So max paying's a little bit lower. Okay, back to the charts. So we've had this nice pop up today. This trend line is held, and we're just under 40.50 on S&P index, sitting at the 50 bar VWAP. Qs popped up a bit above that as well, but we'll come back to this at the end of the video like I always do, and we'll talk more about the main markets. So growth was the winner today. Smalls continuing their trend, doing well. You see the small indexes move back into this bit of a resistance zone here, but looks to be holding pretty good. Internationals did well too. So we got the Canada index moving back up to the top of its range here. FTSE UK is actually sitting around near its all-time highs. Euro stocks approaching that too. We're looking at weekly chart here. Nikkei still trading in a range, but approaching the top of that range. We could probably put a bit of a resistance line in up here. ASX 200 from Australia, not quite up to the top of its range. Looks like it could be holding this pullback here. And China, still flat. We've had that reopening bull run. Couldn't take out this prior high though. But we'll be looking for this support around here to hold, to make sure this bull move is still intact, and maybe China market's finally found a bottom here. Moving forward, let's switch back down to the daily. Volatility fell flat on its face, which has been the trend ever since November. Down, 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 down. 18, now down, coming down to this support zone around mid-17s. We'll zoom out to a weekly chart here. We haven't, apart from dipping down in late January, last time we're back down here was January 22, just when the bear market kicked off. So we're definitely turning here, at least in volatility. I mean, it was October, we'll last over 30, and just sitting down here. Volatility just sitting down, like big, smart, institutional money is just selling premium. We can see that all over the place. Volatility, approaching lows as well. Realized volatility, implied annualized at 14%. There's just no volatility in the market. VIX premium over realized volatility, only 3.7. It's kind of trickling down as well. Put call ratio, with all those guys buying those calls, we've only got equities and indices at 0.91, equity only at 0.75. So everyone's loading up on the calls and pulled back on the insurance buying. We can see that in the skew as well at 118, the premium of puts over calls. So we've had, look at this bounce in stocks above the 20-day average. There's a nice technical bounce, now up to 38%. 50-day average above 51%, and that support level held. And 60% above their 200-day average. So if this thing can hold this higher low here, this run has got some legs, and there's some justification in the price action at least for this bullish move in equities. Pretty good pop today in new stocks making new highs. NYSE 99, NASDAQ 61. Still not breaking out, but it's getting towards the top of its range that we've seen in the last couple of months. Okay, over to the spread charts. Growth versus defensive sectors. Now coming up to the top of their range up here. High beta versus low volatility. Bouncing on volume. Growth versus value. Little tick up, not much volume. Tech kind of consolidating still. and smalls putting in a hammer, looking like to be holding a nice uptrend here. Yield curve inverted as it's ever been, for as deep and as long as it's ever been. Bond market predicting a recession for sure sometime in the next year. Stock market saying no way, it's 1999, let's party. Who will be right? Probably the bond market in the end. High yield versus treasury, same duration. Pretty good move today. Volatility adjusted, coming up to the top of this range here. So this is the market feeling risky again. Inflation expectations still high. And we actually had the 10-year make a bit of a down move today. Off 2.6% down to 3.95. So was to be expected. We're going to get a pullback at some point in rates. Still holding what looks to be a strong uptrend here. 2-year didn't pull back that much, just at 4.85, and Fed Fund futures actually held up. But we could be having a little bit of a pullback here. You can see momentum stalling. We're just starting to peel away from the line. So we could just be taking a little bit of a step back here in rates, or at least having a pause. So this is probably what helped the equity market as well today. But let's just watch this here at 390. You can see we've had some turns there before. We'll see if that level holds, then we'll reassess back there. Global yields pulled back a bit today. And treasuries, 20-year treasury bond ETF, put in a pretty good move today. 2.4% on volume. Gapped up and held. That's technically good price action there. Corporate bonds, same deal. And high yield, back above the trend line. Been watching this one. It's been flicking on, off, on, off, on, off. Now we're back on. It's been a tricky tape, to say the least, over the last week or so. Dollar, kind of similar to rates. Just pulled back a little bit, but not too much. Just kind of consolidating up here. Probably putting in a bit of a divergence. At least having a little bit of a pullback that could keep going back down a little bit to here. And same deal in the euro price action against the dollar, and the dollar against the yen. Cryptos came off today. Look at Bitcoin, down 5% below its 50-bar VWAP. Ethereum as well, 5% moves down. This looks like we could be trying to top out here in crypto. To confirm this is a top, we'll be looking to make a lower low here. So on Bitcoin, that's 21,400 thereabouts. If we can put in a move underneath that, retrace back up, hold a lower high, then we might be able to say this is a bit of a top here. So yeah, we're turned under the 50 bar. That's kind of interesting against what was otherwise risk on mood today across markets. We saw crypto come off 5%, so that was definitely an outlier. Commodities bounced today, now back above their 50 bar as well. So if you're watching the channel, you've been hearing me saying I think the support will hold in commodities, even though we had that climb in US dollar as a bit of a headwind. I think there were just some structural tailwinds here coming into commodities, with China reopening and policy towards fossil fuels could actually help increase their pricing if the supply is going to be choked, and just the general growth coming out of Asia and using commodities. I think this will hold the uptrend in commodities. Copper as well is holding above its trend line. Gold put in a pretty good move today on above average volume. We've gapped up and held, broken out to a 2-week high. This looks like it could be not a strong technical bottom because we didn't quite get to oversold levels. But for now, it's kind of looking good. And I think if the dollar keeps turning back, this could keep going back up, as there's a lot of appetite for gold out there, with inflation and that. And if we just go out to 6 months chart, you can see we've peaked in 11, but we're coming up to that peak. I wouldn't be surprised to see gold go on a multi-year run. I think it's due for that. Inflation adjusted as well, it's still well below its all-time highs. Silver, much the same. Oil, look at this big bullish engulfing. Gap down pretty good, and then just ripped above its 50 bar on volume. so much the same as commodities. And natty gas, we just missed the bottom on this. You have to stick to our risk management and can't keep carrying a loss forever, but we were a few days off the bottom, and look at this, bounced up 7% today on volume above its 50 bar. So wonder how much higher this thing keeps going. This is just crazy. Natty gas is a crazy asset to trade. Uranium popped up a little bit. Okay, over to stock sectors. Look at this, green across the board, no red. Utilities, like we saw, was really oversold. Continued their bounce today. Volatility adjusted 1.7%. It's big for utilities. So big move up in utilities and defense as well. Healthcare as well. Defense stocks. New 52-week high. You've been watching the channel and you know I love defense stocks. The tailwinds fundamentally and technically. And this thing is now approaching all-time highs. If you look at it, if we just go back over to the SPY and you look at how far we are off all-time highs, now look at defense stocks. And with all these geopolitical tensions, that's tailwind. The government is pouring money into these companies. You know, they've got to pump out all these weapons for Ukraine, build out the military. It's a new world out there. It's new threats. So the money is going to keep flowing to these things. And you got to skate to where the puck's going. And defense stocks is bullish for me. REITs had a good bounce here today as well. Industrials, strong, breaking out above this resistance line we've had in here for a while. Looking at a weekly chart here, it's looking like a bit of a springboard, consolidating at the top of the range. And the more you hit the top of the range, the weaker it gets. So this, and typically with a bear market, you know, it's tech stocks, cloud stocks, all those high valuation stocks that took us down. That's normally not the case, that the sectors that took you down lead you out into the next one. So maybe industrials lead the next bull market. If we are going to get turned into a bull market here, it could be an industrial-led bull market. Price action certainly looks like that. Regionals had a little bit. Regional banks had a little bit of a bounce there today and held after being sold off pretty good. Oil and gas, as you'd expect, is looking good. Energy looks like it's back on. And bots is another sector we're bullish on. Artificial things long term. You know, the Nvidia and that might be a bit pumped at the moment, but long term, we made a video back in bots back in early mid-January about why we like this ETF long term, and it's had, I think it was the winning sector today, or up the top 3 winning sectors, up over 3%. Big move on volume. That's bullish price action right there. Semis holding as well. Over discretionary, popped back up, and tech as well. Even ARC back above its 50 bar VWAP. BlackRock Barometer had a nice gap up move, and Apple up 3.5%. I think they were upgraded by an analyst today. Really strong move on Apple. And come back to the channel later tonight, depending where you are. Going to do a deep dive into Apple and let you know my thoughts on Apple and where I think it's going and what my price target is for this stock. I think you'll find that interesting. Microsoft popped up as well. Amazon had a nice little move today after being sold down hard. After putting in a hammer yesterday, we've done this nice big full-bodied candle today. Google had a nice little move, and Meta. They slashed the price on their VR headsets, Quest headsets. The market loved that. So the Zuck is serious about VR and metaverse, and if he pulls it off, this stock is going to look really cheap back in here. We got in here in our equity long short strategy for clients back here and got out just after the earnings pop for a really nice gain. But we still have this thing on our watch list. It was priced that not only metaverse was not going to work, but it's going to continue costing the money. If it does work, this will be the biggest red to green flip you've seen, I think, because it could be huge. And who knows? I wouldn't underestimate Meta and Zuck from pulling it off long term, even though it might take a few years. AMD just holding. Nvidia Now, I do think this is overcooked, and I do have our price target at 141, but the price action today was really strong. We actually took out the earnings day high on volume and finished near our highs as well. Just looking at a 5-minute chart here, really strong price action, 15-minute chart, and NVIDIA. So I wouldn't short it here. I wouldn't buy it because I think it's really overvalued and vulnerable to a fall, but this AI hype thing could still be going. This still could have a lot more gas left in the tank on this AI hype run, so who knows on that one. Netflix just kind of trading really soft here. Couldn't keep up with the markets, struggling to find a bottom. Same with Barber. Tesla, you heard me say yesterday I had low conviction that I think this support level will hold and that we could fill this gap, which we did today. So it was on low volume compared to what we've been seeing. I think this is definitely going to act as a headwind, as a bit of a roof right now, this level around 210 in Tesla, because we've had such a good run and this is not much of a pullback. So I wouldn't be surprised to see us down in the 170s, maybe later next week or the week after, depending on the market. But for now, it just looks like to be holding. It'll probably just hang around this congestion zone for a while, I think. Silvergate, basically flat today after yesterday. Coinbase, surprisingly up today, even though we had crypto market off over 5%. But it looks like it's coiling here. Volatility's coiling in a bit of a triangle formation, which could resolve itself. I wouldn't be surprised that to have a big down day in its 50s next week if cryptos keep dropping over the weekend. That'll have to catch up with that. And AMC had a little pop today, as did a lot of meme stocks, as I showed you in the options market. Meme stock crowd as well and alive, especially AI. Big bear up 11% today. C3 AI up 33% today. You heard me say back here, I think this was going to come off, which it did, and this is all sediment price action. I wouldn't short this here, but look, it's losing money just to show you its financials, just to show you what you're actually investing in if you do invest in this. So last quarter came in 66 million, and they managed to lose 63 million. So that's a negative 94% profit margin. Go back to Q3. Year ago, 69 million. So their revenue's flat and they're managing to lose more money, but they do have the word AI in their name, and that's getting a lot of people excited. No thanks from me. This thing is like hot air. It's like a big hot air balloon, and just waiting for a big needle to pop it, and then it'll just fall flat on its face again. But who knows? The market's crazy. Anything this could see $100 a share before that happens. When these meme stock, we saw what happened with GameStop and AMC back in 21. So that's why I wouldn't short it, because you just never know how crazy the market can get. But from fundamentals and cash flow perspective, you've got a $3 billion market cap. They lost $2.43 a share in the last year, and they're increasingly losing more money every quarter, but they've got the word AI in their name. So pass from me. Moving on, Robinhood just popping up a little bit. Same with all these stocks that are losing money. They're just a pure trade, and I think you have more fun in the casino than these things. Zscaler, we're short this one in our equity long short portfolio for clients. So we had a good day. Our strategy actually hit new all-time highs today, and this helped a lot. We're still short this name. Came off 11% today after earnings, and even though earnings came in better than expected, the market sold off. So that's one of the strongest signals you can have. Good news, market sells off. That's what happens when you have bad news. So we're still short that name. Broadcom, semis, got some strong price action in semis still. Broadcom just broke out today on strong volume, up 5% on a little bit better than expected earnings. So the market's still loving semis up here. And First Solar got upgraded today from the analysts as well. tax credits with the Inflation Reduction Act. They're a big beneficiary. Really strong price action here from First Solar, just ripping up their new 52-week highs. Marvel Tech missed earnings barely, gap down, market bought it, held. Ford increasing their production, that's a good sign to the market, had a good day today, up 4%. Rivian as well, keeping their production targets, so we had a little pop there. And Costco, after their earnings, basically flat, market sold off, but dip bought it. And just another interesting one I thought I'd bring to your attention, Formula One, not really talked about. We had an analyst come out today and say that's the fastest growing global sport. And price action on this is pretty strong on Liberty Media that owns Formula One, F1. Big volume out to new all-time highs today. So this stock is ripping. Fast-growing global sport, which I thought was interesting. Okay, so now we've looked at a bird's eye view of all the major market categories and what's going on out there. Now we can help form an opinion on the overall market and how we should be positioned. So SPX at 40.045. As you heard me say, the market had a chance to dive and sell with the rates and everything, but just didn't do it. It was just so many bids in the market's been bought. We're now sitting at the 50-bar VWAP. Seasonality is starting to flip from bearish to bullish. We can see that across the board. Just looking up here at our seasonality forecast indicator. Kind of flat to bullish, and volatility has gone back down to bearish as well. And looking at this held this trend line here, we've gapped up and hold on a really good day. Our market risk on off indicator is still risk on. So there is some legs to this run from this big bullish engulfing from the 13th of October. We're making high highs and high lows. If we can hold this 3800 level on SPX, that would be called a higher low, and this thing could be uptrending. If we take out 4200, there's a lot of indicators that are going to flip onto bull market when we get a certain distance above the average here. That really gives a higher conviction that is a bottom there. On the other hand, this global net liquidity indicator. Now this indicator shows the balance sheets of all the big central banks in the world, and then comes up with a fair value for SPX based on that. And ever since the COVID bottom, has been remarkably high correlation between this model. You can see it wasn't so much beforehand, but since central banks have pumped so much liquidity into the markets, all that liquidity sloshing around correlates with the stock market value, and it has done really well. You can see here it started flattening out a bit before the market, and whenever there's a gap between SPX and the model, it tends to close. And so it's got this kind of correlation going on with the market, the amount of liquidity out there in the system. And right now there's about a 300-point gap. And last time we had that 300-point gap was back here in August, and that closed down quickly. So we're at a bit of a gap here. So that's, I think, it's going to act as a little bit of a magnet. Of course, this can grow and close the other way, but for now I think that's going to act as a bit of a magnet and a bit of overhead. With rates coming off today, that definitely helped the market, but volatility is just flat. The big SPX money is saying, don't worry about it. Don't worry about it. Market's good. There's no recession. It's fine. Nothing to see here. Moving on. Like, don't worry about it. So there's that, but then we've got the meme crowd buying calls like crazy. Breadth technically short-term has bottomed. Growth is holding up really well. But then we do have those higher rates and a dollar trending up as well. So mixed signals, definitely a tricky tape out there. I said yesterday this could be a bottom. We could go up a bit up here. And if we just draw in a Fibonacci on this last move down, we've almost done a 50% pullback. 61% pullback could be 94. Let's just call it, so around 4100. If we just put in a resistance zone there. And that coincides with the turn we had back in December. We turned at 4100. And back in September, we fell from that as well. So 4100, bit of a psychological level. We are above 4,000 now. Up here, all things being equal, if rates didn't fall over, if rates are still high, I'd be inclined to tilt net short once we get back up here. If we do get back up here early mid next week. And we do have a bit of bullish seasonality coming into the markets over the next few weeks. So I think with all those things there, and there's definitely the price action, there's definitely bids in this market, as I've been saying for a little while here. So I think that is what's going to keep a bid underneath it, and we should probably hold this trend line for the time being. But with rates and other indicators out there, I think this could act as a bit of a roof that we'll be watching. And the market's trading really thick as well. Look at the range strength on SPX, 10.7. So it may not be like we often think in binary ways, like, oh, it's going to rip or it's going to crash. Maybe it just goes sideways. Maybe we just congest between 4,100 and 3,900 for another couple of months, because there's strong arguments to be made for both sides of the market here, bullish and bearish. So I came in today market neutral, flat, pretty much ended the day flat as well. But I didn't want to short anything in this tape, this moving up here. You just look at that 5-minute chart and 15-minute chart on SPY and the Qs. That's just really strong move. Doesn't look like it's topping. So this could easily spill over into next week as well. So I wouldn't be surprised if we trade a little higher into next week and come up and the market has a look at 4,100. And it'll be interesting to see if we hold there or bounce there. I suspect it could be another level to tilt a little bit net short there today. So I just added a long today and finished the day 20% net long. I know I said I didn't think I would get net long today, but there's just a lot of breadth out there today, and I have to stick to my first principle: prices lead, fundamentals follow. So I know rates are strong and all that, and it's definitely always in the back of my mind, but I just will not fight the tape and not fight the trend, and just let price action guide me. So I'm just tilted a little bit net long here, and I suspect I'll stay close to market neutral around here. And because if the market goes sideways, then I want to be neutral as well. I don't want to tilt any one way too heavily. So bit of a tricky tape. We look like we've bounced off this trend line. Could spill over into Monday, maybe see a bit of a doji, bit of indecision, and see what happens up at 4,100. Okay guys, thanks very much for watching. Come back later, I'm going to do my deep dive into Apple. I think you'll like that one. And thanks very much for all your support, all you guys commenting. I'd love to hear what your analysis is on the markets, and if you disagree with something I say, please pick apart what I've said. I've got an open mind and always willing to hear the other side of the argument. And let me know what you think the market's going to do next week. And we've got a bit of news and economic data coming out next week that could move the market as we go into the Fed decision the following week. So that should be interesting. All right, guys, have a great weekend, and we'll chat later.